Hey, world builders, Simon Dixon here. I am doing a follow-up to the YouTube video that I just launched. If you watch that YouTube video and you have a question, then feel free to put your hand up right now. We've got Azad from the Bank to the Future team that will be helping us co-host and bringing some people up if anyone has a question that they would like to answer or get answered, rather. In case Azad needs to go, we've also got Mary that also kindly helps us out as well. To give a little bit of a summary on the video and also a little bit of an update on things moving forward. On Friday, I'm actually traditionally been doing a lot of Chapter 11 content. I'm moving that over to Wednesdays now so that I can try and do two different updates each week because there's so much happening in both the traditional world, the Bitcoin world, the central bank digital currency world, the banking world, and also we've got many of these Chapter 11 cases. So we're going to be doing content on restructuring and Chapter 11 on Wednesdays. That will be on the Bank to the Future Twitter account. I went back to an old show that we launched and never quite went past and did the 7th episode today called Bitcoin Hard Talk. It's all about transitioning to a central bank digital currency and Bitcoin world and protecting yourself and preparing yourself for that as well. So I'm going to be, we're going to be covering and answering questions to give you, for those of you that didn't watch the YouTube video, I went through the situation at Silvergate, Silicon Valley Bank, and some of the other banks and Credit Suisse, the reaction from Europe, the reaction from Switzerland, and the reaction from the US. I went through the structure of the bank bailout, which is not, they're not framing it as a bank bailout, but I went through how the FDIC, the Treasury, and the Fed all come together in order to structure this and what the different risks are, what some likely scenarios as we prepare for what comes next from the Fed next week, which will be a hugely important either a pivot. They've started to pivot from quantitative tightening to quantitative easing as they've added about $300 billion of assets onto their balance sheet, when prior to that, their policy was they were getting rid of about $1 trillion of treasuries and mortgage-backed securities from their balance sheet. And what they do in reaction to whether they stay on the inflation policy, the market prior to all of this was forecasting a 0.5% rate hike. If they do any lower, then they are committing to a long-term inflation policy, which obviously is ginormous wealth inequality that is choosing asset appreciation at the expense of those that don't have assets, which tends to create massive wealth inequality, extreme right and left popularism, at the same as a debt cycle, at the same as tension in the geopolitical side, and historically that leads to a pretty aggressive inflationary cycle for a fiat currency that I think everyone needs to be prepared for. At the same time, we've seen Bitcoin start to hit some of its fundamental trade. It's too early to say, but I think that this is really Bitcoin doing what it was always meant to do. But it wasn't, because we were in a quantitative easing market. And so I always talked about the different cycles in Bitcoin. They go through 4 to 5 year cycles, which normally is a big theme for that cycle that then leads to a halving event and often a regulatory crackdown in the middle. So the first one was the first cycle when I joined in 2011, was about transitioning from a completely centralized controlled network controlled by Satoshi Nakamoto to a decentralized network with Satoshi Nakamoto leaving the project and proof of work becoming something that is highly unlikely to be 51% attacked. That was the first cycle. The second cycle was really when the regulators started to take notice and the banks tried to take down Bitcoin by using the word blockchain and creating all their own blockchains. We had FinCEN start to regulate all the exchanges. We had SEC action. We had the Japanese government creating the first regulations. We had China flip-flopping. We had India, all of those different reactions. Bitcoin got through that, and each cycle it goes to new highs. The third cycle was surviving the crypto money printing cycle, which was characterized by hard forks and ICOs and all sorts of securities that led to many of the blow-ups in this cycle. And if Bitcoin survived that and it reached all new time highs, we went into now the fourth cycle, which was about surviving the quantitative tightening cycle. So because Bitcoin was created in 2008, it's always been in a quantitative easing cycle. And I think we're seeing right now in real time that every time you pivot to a trying to get to an interest rate that would be more in line with free markets, you take the whole system down. If it gets through that, I'm predicting surviving the central bank digital currency market. And then after that, the next cycle would be an artificial intelligence market where proof of work becomes more and more important to combat central bank digital currencies, which are more likely to be run by artificial intelligence than human central bankers. So those are all the different cycles that I think Bitcoin has to go through in its journey to becoming digital hard sound money. So I covered lots of different topics. So Azad, should we bring some people up to the stage? If any questions there?
Yeah, we have Ibrahim.
Hey, Ibrahim.
Hello. It's a pleasure speaking to you, Simon. I just would like to ask you, what would happen to the price of Bitcoin if the regulators start regulating Tether and Ether? If Ether was even closed or shut down, or God forbid, anything like that, what would happen to Tether, and what would also happen to the price of Bitcoin?
Yeah. So, firstly, they already do regulate Tether. So Tether is a registered money service business, and it's also operates off different regulatory regimes. So it does have its money service business, but the question is, what type of regulations come next? And one thing we have learned throughout this whole saga is that I've always been preparing people with stablecoins to manage risks. Full disclosure, I ended up a shareholder in Bitfinex as a result of restructuring the company for creditors when they were about to go bankrupt. And because depositors were going to lose their money, we came up with a free market restructuring where I ended up a shareholder in Bitfinex as a result of that. And Bitfinex are the same management team that operate Tether, as you know. I was also an early investor in Circle, which created the USDC stablecoin, and an early investor in Coinbase, which were the partners. So I always have to do the disclosures whenever I can. So, I've always said that you need to manage those risks because there's a huge risk of stablecoins in the US, and there's another risk of stablecoins outside the US. Tether survived this one and was the beneficiary of some of the challenges within the USDC market as a result of some of the regulations that exist within the area. Now, what I think we have learned is that stablecoins are essentially very similar to a money market fund. They have bank exposure if they are not the algorithmic ones, like some of the ones that blew up or some of the ones that survived. Obviously, an interesting one is DAI because it was algorithmic in the DeFi space, built upon Ethereum. So you have smart contract risk, you have ETH risk, you have depegging risk in order to manage. But it was also backed by some USDC stablecoin because they reacted to what happened with Terra Luna to try and put some bank deposits behind that, which is an interesting scenario, which caused its depeg. But once those risks were managed, free market pricing really supported in understanding those risks. And then it was more like a money market fund. So essentially, it's like a security, which I know many people said they don't see it as a security. but it really is, disclosure on what's behind the assets and understanding the risks. Now, what about Tether? So Tether publishes the assets that make up on the Tether website, as USDC does. And it's had its fair share of issues as well. It had $850 million, confiscated by the banks that it was using. Had $850 million, seized by government officials. It wasn't actually connected to Tether, as far as I know. We'll find out as if anything comes from that as well. But also, so it's had its fair challenges. It plugged that hole last time it had with a free market solution as well. That was another restructuring that we were involved in to try and alleviate some of the risks in the market. But when you're managing those risks, what happens if stable coins do blow up and they get considered securities? Well, the first thing is they would need to trade on a security token exchange. If they wanted to start enforcing on-chain KYC, then that would really, introduce new on-chain innovation, which would be a new way of doing things. Or if they wanted to actually shut it down, then they'd probably, the best way, one of the ways of doing that would be they'd just simply sanction US investors, and then they'd have to do some kind of on-chain KYC, because it looks like it would be compliant in other jurisdictions, but those are the different scenarios to go through. But what we have seen is that when you have risk in a stable coin, people fly to two different areas. Some try to redeem for dollars, and others buy Bitcoin. Or others that believe in ETH would go to ETH. Now, I don't think there's much of an appetite globally to make Ethereum a stable coin, but I was always pushing back them going from proof of work to proof of stake, because I believe that everyone would start staking at exchanges. Exchanges aren't regulated securities business, and therefore you'd end up with some centralization effect, which is what turned out to be happening. And then the regulator would come along and say, if you're offering staking services, then you need to comply with securities laws. But so far, they haven't made ETH a security within the US. And so those are all the different types of risks to manage, and that's why ETH is infinitely more risky, which is why it tends to have generated a higher return. Full disclosure, I was an investor in the ICO. I'm much more a Bitcoin guy, but I also take 5% of my Bitcoin and invest it, as I've covered in previous videos, to try and generate higher returns. And I see Bitcoin as a savings mechanism. So I think it would be a flight to savings is the long answer, but I'd always like to give background so people can understand my thinking. And I think it would be a bullish effect for Bitcoin. May have an initial reaction, people may misunderstand it, but I think one of the things we did see is that some were converting USDC to other stable coins, others were looking to redeem to dollars. But I think most people, they wanted to stay within crypto, because as the choke points in the banking sector were cutting off new onboarding, it kind of created a bit of a premium to be in here, because most people want to stay once you're in it. So that's my thought process, but not investment advice. It could go, I think initially it would be a big shock, but I think the fundamentals tend to prevail in the end.
Thank you very much, Simon. That was a very clear answer.
Thank you.
Okay, I don't think we've got anyone else, but anyone else who's got a question, please request to come up as a speaker, and we'll get you up. Simon, did you want to?
Yeah, I'll keep going then.
Yeah.
So, we tend to get people request all in one go because they want to listen more. So the format for future is that we do the content on YouTube, and then we take the questions over on Twitter Spaces. So if you've got any questions, please do come up. I think one of the big things. Are we starting to see any requests, Azad, or should I carry on with another topic?
Yeah, we've got. We had Natty. He's gone now.
Okay.
We've got John Q Lunch Bucket.
Hey, John, are you there?
And Natty's just connecting. We've got Eric. Let's try Eric.
Okay, cool. So we've got 3 of you up. Whoever's there.
Hey, Simon, it's Eric. Can you hear me?
Hey, Eric, how you doing?
Very good, very good. Hope all is well. So obviously, we saw the fallout in 2007 and 2008, what that financial crisis had. I know in your YouTube presentation, you mentioned I think it was 150 billion to 100 million, or maybe it was more than that. What do you between what? I don't remember what the number was referencing, but what do you think the fallout, the end result of the fallout here is going to be in comparison to 2007, 2008 crisis?
I think the biggest news is a couple of things. It's one that equity is going to get wiped out. So the 2008 was more of a debt crisis. And so, excessive debt within the banking sector through trying to get more and more people into mortgages, because the debt-based Ponzi scheme requires more debt from individuals, businesses, and governments in order to sustain itself. When those debts create a deflationary cycle, which is what we saw in 2008, where the debt disappears, the money disappears, and therefore you get this inflationary pressure, which would be recessive unless the central bank backstops and takes on all of the debt so that they can increase the money supply. And that was really the start of all the negative rates. Now, this one is a different flavor. I think it's an equity problem. So what we're going to be seeing right now is, for example, in Silicon Valley Bank, we had a lot of companies that would have been that are going to be raising finance now in distress. And so although they've got their bank deposits backstopped, they're going to be thinking about how they react to that, how they manage their risk. They're going to have a bit of PTSD. They're going to be thinking about what types of products, how should they manage their flows in this type of environment. And they'll probably be raising finance as well at significantly discounted valuations to their prior markets. And so that has a knock-on effect of decreasing equity valuations. Then you can start thinking about the different types of products like Cathie Wood's types of funds that would have to mark to market based upon these distressed raising equity valuations. And so I think we have really a mark-to-market issue, an equity issue, and really a need for people to sell distressed assets was more of the issue, not based upon a liquidity issue where they couldn't ride it out. So that's really what I think the side effect is. I think the big impact here is going to be a shift to moving back to an inflationary market. So I think the big loser is inflation. I think we have to get used to extended inflation for extended periods of time, because I think they are going to pivot. I think we have proven, and we will prove over the coming months, and we'll see what comes next, that there is no sign of free markets. There is no reality. And there is no way of reversing this, because anytime the market sniff, all of the VCs come out and start saying this is systemically risky. We need to backstop the whole system. And then the VCs and the banks come along and implement a one-way bet bailout based upon the FDIC backstopping. So they get a one-way bet if it goes wrong or if it goes well. So again, this is why I always talk about this as a transition to CBDCs, because this only takes us in one direction, which is that the central bank and the governments take away the ability to create money from the private banking sector and give it back to the central bank, or even go even more extreme and give it to the government as the final rollover. I don't think there's another rollover from here. I think this is really the last one. We've got the beta of the CBDC. And remember, a CBDC is deflationary from my how I imagined it would be implemented, because you're replacing debt-based money with debt-free money, and you're making sure that no one loses their deposits because they download a wallet. And so really it's just a shift away and the importance of maintaining free markets in Bitcoin, and actually having a system that exists with Austrian economics, with all the market manipulation. Certainly, I mean, there's massive market manipulation in Bitcoin. You can't stop that. That is a free market force, in fact. But yeah, I think that's the big impact, which is a reversal and an environment that has to get used to inflation, and proving that anytime the market reacts, the central bank reacts based upon the market and chooses inflation over a recession.
Well, awesome response. I appreciate that. One more thing. I saw you like going back and forth, I think, with David from BTC Media. And quite frankly, I'm not sure if you agree with him or don't. Do you feel that this is an attack on crypto, what the government is trying to do essentially? Or do you feel like it wasn't so much like they're not coming after crypto?
No, I think they're definitely wanting to make crypto enter into their traditional regulations. So I think they want everything to be a security. I think they want everything to trade on a security token exchange. I think they want the big banks to come along and start offering crypto services. I think the way that they designed the US designed its Fed Now and beta its CBDC is pretty interesting. That they're imagining integration with some of the concepts in crypto that we're more used to. So I think this is just like the small banks are all going to get gobbled up by the big banks. I think much of the crypto innovation is going to move over to the fringes. So when it comes to CeFi, they're going to want it to be done by large financial institutions. And so I expect a wave of M&A activity in that. And I think it's going to push the innovation of DeFi to its limits, to try and preserve some of the. And I think it's also going to. We've reached a critical mass in Bitcoin, where I think we're going to see some of the interesting effects with Lightning Liquid and some of the learning that we got from Ethereum. And essentially, the only reason that I turned to CeFi was because I didn't want to sell my Bitcoin, so I wanted to borrow against it. I didn't want to wrap it in Ethereum. And really, if I had wrapped it in Ethereum, then I probably would have been in a better place than when I put it in a CeFi platform. That much is certain. But ultimately, all I would have really wanted is for it to be possible on Bitcoin. And I think we're starting to see the next waves of companies. I'm starting to look at some investments in those spaces as well.
Cool. Thanks
But
so much.
I do certainly think the attack on crypto is not to eliminate crypto, is to give it to the powers that be, and is to launch a CBDC, and it's a recognition that they can't stop Bitcoin, and so they want to get used to a Bitcoin world.
Thanks so. Yeah.
Yeah.
No.
Cheers.
Thanks so much, Azad Mary. You can move me down. Thanks, Simon.
Okay, let's bring up Hilux.
Yes, hi there. Hi, Simon and everybody. Let's say there is more contagion from last week and the newly created Bank Term Funding Program tool is utilized and the few billions it has get all used up. If the powers that be want to continue to quote unquote backstop things, where do the next billions come from, do you think?
From inflation. The government prints it up. They continue. It's going to be an unlimited. There is no limits. We've reached the point where there is not a number that makes sense. So it's just Ponzi economics. Is continuation from here. And they will keep going until you have to implement a deflationary currency by necessity to save the dollar. So there is no number. There is no where does it come from. They just create a new tool. And these tools are just imaginary numbers in a database that push one number from one database to another number in another database. and creates, the desired feeling for people to retain its confidence. But at some stage, the people that are on the wrong side of the debt cycle, through inflation, just can't sustain themselves anymore. And unfortunately, that is my belief. They will choose inflation every time.
Okay, so it's just more printing, more inflation.
Yeah, until you decide to allow banks to go bust and find a mechanism, which would be a CBDC, to ensure that people don't lose their deposits and get wrecked in the thing, and they opt into giving up their freedoms instead.
Okay, thank you.
Thank you.
Thanks. Let's bring on K9.
Hi there. Yeah. I wanted to ask what you think the future might be for the Bitcoin miners over the next cycle. And I think 25,000 is kind of a key level for them. But do you expect that some may have funding problems if Bitcoin drops back to below, say, 20 or so? What's your thoughts on that?
Yeah, so if you look at the difficulty rate has relentlessly increased, which means that somebody is willing to mine at these levels, which means that deeper pockets are willing to mine and try and ride out some of the distress in the market. So I think the IPO model dies. I think the model of IPOing in order to gain access to the debt capital markets introduced too much debt and interest inefficiency. And so those with the deepest pockets are the ones that can continue in that game, which is quite interesting because some of the Chapter 11 cases, we can cover that more when I do Chapter 11 stuff, but in the case of FTX, they invested $1 billion in a mining operation. And I know that there's not much debt in that as well. So that's an interesting asset that creditors might want to be coming after. And also in the Celsius case, there was a big investment in 120,000 mining rigs, and the debtors were the creditors. So if they wipe out all of the creditors and swap it for equity, then you have a pretty big debt, mining operation. But then they're competing with the public companies, and the public companies are over leveraged. And so, for example, Core Scientific, in its Chapter 11, if it can wipe out all of that debt, then it puts itself in a unique position. So the miners that survive, I believe, in the last cycle, it was based upon your ability to access debt. In this cycle, you're competing with some serious players. You got the BlackRock blockchain ETF, which means that there's a constant flow of money into this sector. They can only invest in the public companies. So the public companies tend to be the beneficiary of most of that. And we saw that with, much of the institutional pension money that was investing in this sector went straight into mining companies, and so it is an ultra efficient mechanism. I've been involved in, Bitcoin mining. I first started mining in 2013 and creating financial products using Bitcoin mining in 2014 and 15. We did a crypto bond, a Bitcoin bond in 2014 based upon geothermal mining power in Iceland. And then we did a VC fund that was part equity investments and part Bitcoin mining. And it's just continually an ultra efficient market that really had the economics right and a beautiful difficulty adjustment that tends to knock out all of the inefficiency. But yeah, I do think the deeper pockets with less leverage and 25,000 is a key area for those that are trying to survive in the existing cycle. So in a funny kind of way, the banking crisis, obviously, it's an absolute disaster for many people. But if it turns out that Bitcoin returns to fundamentals as a result of people understanding that you need to own your own money, spend your own money, and combat inflation, then we could get a sustain of real fundamental pricing from here rather than just QE money, which I think is interesting. But I also think that there's going to be rapid innovation in both the energy side, the ESG narrative of making sure that it's environmentally friendly. And so I think you're going to see lots of institutional players and a lot of innovation around using wasted electricity and repurposing it. I think we're going to see a lot of that innovation come through, and some of the more cleaner energy cycles. So yeah, it will always adjust. It's a hard business to be in, but proof of work is the most important innovation that I think takes us through the future cycles, and the entire crypto market gets a free ride on Bitcoin proof of work anyway. So as long as Bitcoin continues to do what it does, then the crypto market gets to benefit from that. But yeah, proof of work is to be cherished. It's probably the most important thing that's going to be responsible for more economic freedom than anything we've seen since probably the internet.
All right, Natty seems to be having some issues tech-wise, but he's sent me a message. I want Simon to talk about the Cypherium blockchain and FedNow to be launched in 2023. Really, the USA CBDC testnet launch crazy. And
Yeah.
he's got a second question as well. Does he believe?
All right. Well, I'll
CBDC...
take that one. Do one each.
Yeah, go ahead.
So the two major pilot launches are DCEP in China, and then we just got the FedNow launch on the Cypherium blockchain. And this blockchain is probably something you never heard of, and I haven't dug deep into the white paper yet, but it comes up with this 3-tiered structure that I covered in the video. And I haven't got too much to add to it really, because I just haven't looked at the concept yet. But it's using, proof of work to write to the blocks, or to, and then we've got this other concept that they came with that I need to look in a bit deeper to validate transactions. And then they've got a voting committee that is just absolutely fascinating how they see these things. An interesting trend as well is, obviously Libra, when they tried to do it, it really sparked off the innovation in DCEP in China, because Libra missed out the Chinese yuan when they created their basket of currencies, when Facebook wanted to launch their their corporate stablecoin, as it were, or payment network. And that was the reason why DCEP got launched, because and then the US decided to shut that one down. I think Twitter still has an interesting play that they want to make moving forward as well. But yeah, I won't go too deep. I'm actually probably going to do a deep dive in a future videos around FedNow. But DCEP is way ahead. They're doing tide load. I think someone's got their mic on. It's causing a bit of noise. Yeah, DCEP. Oh, Azad, you able to mute whoever that may be? Okay, cool. Yeah, DCEP is way ahead, and it's done the integration with the banks, the integration with the systemically important banks and systemically important tech companies. It's already got complete global adoption of digital payments through wallet infrastructure through WeChat Pay and Alipay. It's already got 250 million wallets downloaded in beta. It's already integrated with, China has a bit of a free market at the state level, but run by the China Communist Party. So it's really easy to roll things out at the China Communist Party level. But they also, at the state level, the regional level, they have very capitalist markets as well. It's just once you become worth a certain amount, billionaires don't get to rule China. Billionaires only rule America. And so you then have to integrate with the government and follow the Chinese Communist Party agenda once you become a certain size. So it's absolutely fascinating to watch So yeah, I'll give you more details as they come. But you can check out the white paper, you can check out the blockchain, and if you didn't watch my YouTube video, I went through some of the things that I just initially seen amongst all this carnage. Too much to study, too much to look at.
Okay, and the second question from Natty is as follows. 1 second. Where is that? Okay, it's does Simon believe the CBDC will save US dollar as a global reserve currency? Said differently, does he see the collapse of the US as global reserve currency in the next decades?
Oh, what an interesting question. Yes, I see it saving the US dollar. And it's interesting that they managed to get Fed Now out. But a CBDC is very unconstitutional. And the thing that saves freedom in America is one of the best, underpinning, governance structures through the Constitution. But obviously, the US dollar is already unconstitutional because the Constitution stated that it should only be backed by hard money and gold. And it's illegal to counterfeit the currency, which they gave a license for banks to create money every time they issue a loan through fractional reserve banking. So the US dollar is already unconstitutional. So they've always shown that they can get a bit funky with the interpretation. But that is an interesting concept because the key to a rollout of a CBDC is a culture that is willing to accept it. And so the only way you would get a CBDC rollout in the US is, I think, if you were faced with the choice of losing your deposit and downloading an app, in which case you'll take it. You'll take the drug. So I do think it can certainly save the dollar and be a deleveraging effect. But I think the winner of the CBDC is based upon larger geopolitics. And so the IMF is obviously the conduit for that has been spreading dollars around the world and getting countries in debt using dollars. They also created their overdraft facility with the IMF. They presented it as if it was backed by a basket of gold, which was the original initial contributions after World War II. But they actually created an overdraft facility called SDRs, where any country can draw upon that overdraft facility with the IMF. And obviously the IMF is a US connected entity. And so I think restructuring, let's call it chapter 11s of countries, probably become the mechanism for ensuring the future of a world reserve currency. So if China comes along and said, we'll give you a massive infrastructure loan to your country to roll out your AI 5G network, and they say a condition of that loan, just like the IMF used to do, is that you have to spend the money back to our suppliers. So, the US got its domination by lending out dollars and making them tied loans so that the debt ended up in the developing country and the dollars ended back in America. I think you could see the China's Belt and Road Initiative do a similar thing, tie the loan to, adoption of, in order to gain access to that infrastructure, you have to download the wallet of the CBDC. What I think is a really interesting question is thinking further ahead. Is China obviously outweighs the investment in AI at the moment, which is why Silicon Valley Bank was so. I considered it a national security risk, and obviously the VCs went to town with that and put out the propaganda machine in order to try and get a backstop for the whole system, so that they could socialize the losses and privatize the gains. But led by Bill Ackman in some of the Twitter spaces that I was on as well. So it's pretty interesting how this works when you create these moral hazards and these different narratives that can form. But yeah, I think country restructuring is going to be the winner of the next world reserve currency. And I do actually believe in the next 10 years that an artificial intelligence could probably do it better than any human central banker. And there's a possibility that puts down borders and is not even connected with a country. Because if you get to the point of singularity where where artificial intelligence can create artificial intelligence at a more efficient rate than a human can. I think it's only a matter of time before they start managing currencies better than humans can. And the only force that can combat that is proof of work. So I think that's it's going to be some interesting currency wars, and it may not be. We may not have another empire. We may end up in a very different world in the years ahead as a result of this innovation.
Okay, we've got another question from K9.
Hi, yeah, I had a few more questions about Bitcoin mining. I don't know if that's a road you want to go down now, or
Go for it.
So I'm not sure if I caught your answer. I was wondering if you're expecting at this point all of the or most of the public miners to survive, having come so far, because they seem to have found funding from somewhere until now. But I guess if there's another leg down in Bitcoin, that could be a problem for them. But also, I was wondering about the kind of regulation threat in the US, particularly with ESG. I mean, I know Texas is very friendly to it, and most of the red states, but I mean, places like New York, and I know from ESG point of view, they're not too keen on it. And then also, I was wondering about with this Operation Choke Point, do you think more people might use the miners as proxies to get Bitcoin exposure?
Okay, so yeah, the first question is, if we get another, I think most of the mining companies that survive this far, they're going to have a big sigh of relief. Now, how competitive mining gets from here, and whether they can gain access to additional debt, or whether they just roll out their miners to the end, I'm not too bullish on investing in mining companies on the public markets. I'm more interested in the private markets than the public markets. But yeah, it's even if they go into distress, though, we have seen in Chapter 11 cases that you can just wipe out. It's one of the reasons I'm not too keen on equity in the public markets is you can just wipe out the equity in order to restructure and then take out a debt-free operation that could then give you a competitive advantage through a Chapter 11 case, which is some of the things that we've seen. So yeah, if you're looking for a forecast on, I don't own any shares in any public mining companies. The only reason I may end up with some is if it becomes a result of one of these Chapter 11 cases. I'm not sure yet. So not too much intel there. The second part of the question, regulations, I think you said. I think the ESG narrative. So Bitcoin has always been plagued by a narrative of when the regulations, and it's always reacted. So the ESG narrative, from my perspective, just drives the layers of innovation that will happen within the mining sector. It's so competitive that we just saw when China puts their hard foot down, it became a massive opportunity for America. Now, if America then puts their hard foot down, it becomes a massive opportunity for Africa and Central America and South America and Canada and other countries. I think there's always going to be an environment that will want to support proof of work. It's just a question of where it goes and where it lands and how decentralized it continues to be, which is really the importance of the block size debate. The fact that we kept the block small meant that we can now have affordable nodes, and even if mining gets fairly centralized, we can decentralize the network through node operators, which is a really, really important feature. And if we had gone for bigger blocks, we probably would not have the disbursement of nodes that we currently have within the network, which is probably one of the most important things moving into the future. So yeah, I just think it pushes the innovation, and Bitcoin does what Bitcoin does. It takes the narrative. Some draconian governments implement something and it backfires. So China just gave all the data to US and gave all the business to US. And then if US gets all funny, they'll give it to David to beat Goliath at a time when America might be going through some serious distress, and it could have been a future industry that would be, I think, significant to the future of its country and its political will, in order to prove that in a world of CBDCs we still believe in freedom. And the only way a government can prove that they still believe in freedom is by allowing the convertibility of their CBDC into Bitcoin and allowing proof of work to exist. Any country that doesn't do that doesn't believe in freedom. And so it becomes an important, I think, thing. But yeah, the ESG narrative it's always been there. And I think it just drives innovation. That's what Bitcoin has always done. It just drives innovation. I can't remember what the third question
just
was.
wondered whether you might expect to see kind of in the short term maybe a bigger flow of funds into the miners as a kind of proxy because of Operation Choke Point, and if you had any thoughts on any other proxies, MicroStrategy, or any other thoughts on that.
Yeah, Bitcoin mining has always been interesting because if you think about it, what China initially did, and I used to point this out, that they allowed the mining industry to continue. They obviously stamped down on that one eventually, but they banned the exchanges. And the funny thing about that is the exchanges is what gives you the on-ramps and off-ramps and all the data you need so that you can then connect it to the blockchain transactions as people leave the on-ramps and off-ramps, which is, what allows it to survive. And, is you get access to that data, which is by regulating the exchanges. And so that's a really important thing for a country to do. If they ban the exchanges, then the data just goes to your competitor. So like when I remember when South Korea got quite aggressive, it went to Japan. When China got aggressive, it went to other jurisdictions. But mining creates a mechanism for you to invest your money, fiat currency, and end up with virgin Bitcoins, which is hugely attractive to institutional investors. So if you're an institutional investor, there's a premium you would want to pay for virgin Bitcoin, i.e. it's Bitcoin that's freshly mined, that has no transaction history, so you don't end up on the wrong side of some AML blockchain analysis. So I think people will pay. Pay a premium for it. I think it will drive more into the proxies. But I'm really looking close at the GBTC case. The reason being is because I think the GBTC are actually kicking the ass of the SEC in this case. That there was a ginormous regulatory failure in not allowing that investment trust to convert to an ETF, and the fact that the reason that they gave in many of the rejections of the ETFs, which are available in Canadian dollars and Aussie dollars and various other and GBP and various other major currency pairs. But the fact that they didn't allow it in US dollars simply because they said market manipulation, and then they allowed the futures ETF to come through, and the futures ETF is obviously based upon spot pricing. I know that because I invested in Kraken, and Kraken was created and purchased the company that they were then using for the futures market pricing, which makes up the futures ETF, which is so it all. I think that the outcome of that case becomes really important, and if GBTC could either be allowed to redeem or converted to an ETF, it's going to be a massive win for shareholders and for. I think it has to go to the best outcome is that they do convert it to an ETF, because that means that Digital Currency Group continues, and then they can pay off some of the other Chapter 11 cases like the Genesis and then Gemini case, because they structured a debt restructuring. And then also, if they can get the prices down to more competitive ETF pricing, you can have less of a premium and discount and less speculation in the product and real, which is what essentially one of the real contributing factors that took down the fake crypto banks, was that discount and premium and the hedge funds that were borrowing in order to place that trade. and generating yield in the lending, the Bitcoin lending companies. So I think the ETF will become more of the proxy, and then I think mining will also become a diversification, especially for the BlackRock ETF and more products that I expect to come through there, because you can get your Virgin Bitcoin. I'm interested in seeing if we can get a redemption mechanism. Yeah, that's my thoughts on that. Thank you for
Thanks,
your
Hildan.
questions.
Okay, we've got no more speakers. Anyone else who's got a question, please come up. Otherwise,
Okay, I think we've done most of the 1 hour, right?
Yeah, we have. It's not 7:40 now.
Okay, awesome. So yeah, the new format for everyone. Thanks for joining. So historically, I've been deeply involved in the Chapter 11 cases. I'm still deeply involved in some of the Celsius cases as a creditor there. But we've decided that we're going to move those over to Wednesdays. So for those that want to catch up on the latest, head over to the Bank to the Future Twitter account, and we put up the Celsius Chapter 11. We'll be answering this. So much has happened at the same time as all this. So make sure you set a reminder for that one. And then on Fridays, we're going to continue doing the Bitcoin Heart Talk, which is going to continue along the lines of what we've covered today, in this transition to a two-tiered world of Bitcoin and CBDCs, and everything that people need to do to try and prepare themselves for that. So I hope you like the new format.
Hello.
Yeah.
Hello.
Oh, hello.
Hi, it's Liz Casper. May I share a story with you and then ask a question?
Okay, go for it. Yeah. Have we lost Liz? I think we lost Liz, unfortunately.
Oh, I'm sorry, my mic went off.
Oh, right.
I would like to tell you a story and then ask for your advice. I've been told to put my money in crypto, which I never have. So I decided I was going to move my cash to gold. About 6 weeks ago, I have two major accounts. One has 1 million, one has 500,000 in my corporate accounts. And I just got kind of that eerie feeling, and I was like, I should go to gold. So 6 weeks ago, I went to my bank and requested cashier's checks. And eventually, a couple days later, they said, we don't have the money. And I was like, what? They said, we don't have your money. And then they eventually said, well, we might be able to get you the FDIC insured amount. And I was like, well, that's 500 and I'm owed 1.5. What do I do with the rest? So I'm currently, my transactions are in transaction with no identifying numbers. This is Umpqua Community Bank on the west coast of the United States. Their tagline is the world's greatest bank. So I'm in the system with the guy the other day. I finally got a human after a week of calling because it kept hanging up on me. And I get this kid named Lexi, and he gets my social in order to find my account. And then I said to him, Lexi, I like your name. What's your last name? I can't tell you. Well, okay, how about your bank ID? I can't tell you. I said, well, how does that sound fair that you have my social and I can't get your bank ID? 15 minutes later, I got some random ID number and hung up. So they have my 1.5 million. So as of today, I have no cash, but I have Platinum Amex and I'm their top customer. So we're all good. I could at least charge, but I can't ever pay Amex, but they'll cover me. They said they'll cover me for as long as I need so I get my cash out. So I've been hanging out in these Twitter spaces. I've known Elon for 30 years. What?
Oh, what happened? Yeah. Carry on.
So Elon and I are very good friends. So he's as puzzled as I am about this whole situation. And yet everybody keeps telling me I'm in these Twitter spaces and they're telling me to put my money into Bitcoin. And I'm thinking, well, number one, I have nothing right now. Number two, no one can tell me what is it built on? What is it backed by? Those are the two requirements that I have to even open the conversation. So could someone please help?
Okay, yeah. So firstly, I definitely can't give you financial advice, but thank you so much for sharing that story. It's truly terrifying. And, you know, having been involved in Bitcoin since 2011, I've seen that we've always had spikes in education as a result of certain events where people react out of necessity. And so, like, one of the really early cases was when people were trying to contribute to WikiLeaks, and they realized that the banking system wouldn't let them contribute. And so people started using Bitcoin. In 2013, when Cyprus decided that they needed to bail in and convert everyone's deposits above a certain amount into shares in the Cypriot banks, people started to look at Bitcoin. When India started requiring people to take their lifetime savings that they had under a mattress in cash and put it into their bank in order to have a reform on the tax sector through monetization, a lot of Indian people diversified from not just cash but gold and Bitcoin as well. So we've seen a lot of these events that tend to drive people asking the questions. And I think your question is an example of, I don't really care about Bitcoin until I have to. In terms of what it is actually backed by, it is backed by what's called proof of work. And proof of work is essentially a decentralized network of computers where none of them control the network, and they all contribute electricity and spend vast amounts of electricity in order to act as the auditor in a way that requires no trust. So it's backed by energy, it's backed by electricity, and every single computer, they act as auditors and banks, but they all run the same code, and they all compare with each other that this person owns this money and that person transferred that money. And if anyone tries to rig the system, they have to actually try and control over 50% of the network. And it would cost them billions and billions and billions of dollars to try and take down the network. And then they'd have to try and control 50% of the power. So it's a complicated answer, unfortunately. But if I were to answer what the money in your bank is backed by, the answer would be equally and more complicated, but it has that trust. So Bitcoin works off trustlessness, and so it allows you to own your money. So it exists on your, you can store it on a hard drive on a special device. You control it, and so you can send that to anyone else that has a Bitcoin wallet address, and then the supply of it is always known into the future. On top of that, you get the crypto market, which are things that are very different to Bitcoin, but allow you to do lots of different things. It's a journey. And the way I've always tried to help people get started is, it's not you suddenly put all your money into Bitcoin in crisis. It's what I did. And what I did is, when I discovered Bitcoin in 2011, I figured out how to buy some. And then I put some on my phone. And then I figured out how to send it to somebody. And when I sent it to somebody, it made this bleep. And I realized I didn't call a bank. There was no central bank. I didn't have to create an account. I didn't have to do anything. And then I was like, what is this unconfirmed transaction thing? And then 10 minutes later, it said one person has confirmed it. And I was like, who confirmed it? And then I found out that there's this all these miners that confirm and audit the transaction. And then I was like, well, how do I prove to someone that I sent it? And someone said, oh, you go to this website and every transaction is published. And I'm like, well, how do they know that it came from me? And they were like, well, they don't, but they can see the network, and then you message them and tell them it's from you. And I was like, oh, right. And how come they know my other transactions that I made afterwards? Oh, it's all public. And so you just start to learn bit by bit. And so what I've always said, the way to protect yourself is to think of different scenarios. And I've always talked about 3 scenarios, which is the US continues to continue its domination through the US dollar. and it decides to take away the freedom of everybody by launching a currency controlled by the central bank. As long as they do that, then the dollar will benefit, and all of the derivatives of the dollar, like the stock market and everything that comes from that. So I have a portfolio of my wealth that even if Bitcoin crashed, I'd still have that. I also prepare for a transition to a new empire, because that happens. And most people don't prepare for it because historically it happens every 100 years or so. And most people don't live 100 years, so they've never lived through a change of an empire, and they don't think it's possible to happen. And so that's where gold comes in. And gold is pretty difficult to own because of the safety of it. So you end up putting it at a custodian, and hopefully that custodian is well run, and you put it in a country like Switzerland or something like that. But there's still an element of trust. So then you look at the third part, which is where the Bitcoin part comes in for me. And what I do is I've managed my life where every month I earn fiat currency and I convert it in equal proportions and just ignore the price of all these things. And then every month I just send a wire across. It goes into my 3 buckets, and I start to manage it from there. Unfortunately, we live in a world right now where the simplicity of just trying to put your money at a bank means that you now need to be a portfolio and risk manager. And the whole purpose of, insurance schemes was so that you don't need to worry about money at a bank. But the reality is I've always tried to tell people that money at a bank is a speculation on the creditworthiness of that bank and the creditworthiness of the government that's insuring in it. And people need to hedge those risks, and the wealthy do. They can afford wealth managers to do that. But everything you do is a speculation, and so there's no such thing as the illusion of safety. It's just a series of events that people need to be prepared for, so that when one of them goes wrong, they're ready. And so the biggest mistake I see people make is they say, put all your money in crypto. Well, that worked out very badly for a lot of people because they put it in one place. Or put all your money in a bank. Can you believe it? There was one of the bankruptcies where a company called BlockFi took everyone's Bitcoin, converted it to dollars, and put it at Silicon Valley Bank. And they converted it from Bitcoin to dollars at the bottom of the market. And it turned out that Bitcoin was the thing that they could have owned. And Silicon Valley Bank gave them exposure to whatever comes next from the FDIC, the Fed. And so, sorry, it's a really long answer, but unfortunately, there is no simple answer in finance. And people have to be prepared for different eventualities. And when things go really wrong is when people bet on one thing and it doesn't go the way that they prepared for it to be. And most people bet on the US system, the US banking system, and the US stock market, which may work out, but sometimes it doesn't. And at some point it won't. And so people need to be prepared for that. Thank you.
Okay, so Simon, what do you want to do? We've got a few more people requesting to come up.
All right, well, let's go on a bit longer then if we've got questions.
All right, let's bring up Jav Bradley. Yeah, let's try Bradley, and next will be Javid.
You there, Bradley?
Hello, this is Javid. Can you hear me?
Hey, Brad. Oh, did you say is that
Yeah.
Javid? Hey, Javid.
Hey, Simon. Thanks for all your content and all the insights that you share with us. I had a question, but I kind of also had an analogy that I wanted to kind of present to you to see if it makes sense in regards to Bitcoin and how I see it. So it's like you have public transportation. Say our monetary system is a bus, right? And you get on the bus. It's convenient. You just get on. You get off at the stop you need to get off. But the Fed is driving this bus, so maybe they take a wrong turn, maybe they change the route, but you're stuck on the bus. Whereas Bitcoin is kind of like buying a car where you have to maintain that car and you have to, take care of it, but you also have the freedom to go in any direction you want. You can go parallel with the bus, go to the same destination, or if they're going somewhere, you decide you don't want to go there, just go somewhere else. I don't know if that's a good analogy, but I just thought of it. It might be a dumb analogy.
Love it. I think what's really important is when new people come up, like the lady there was looking for what Bitcoin. It's been so long. I assume so much because we've come so far as an industry.
Yeah.
But we got so many more people to. And I remember back in the day, I used to really try and think of the real simple ways of explaining this stuff. So analogies are really important. And finding more simple ways of explaining this to people. It's been we get caught up in our jargon and our little bubbles, and it's moments like this when I realize that the true beauty of Bitcoin is in bringing new people into the freedom that it gives, and we have to find easier ways of doing that and better ways of doing that. And Operation Choke Point is a bit of a challenge for the US industry as well.
Yeah, no,
Thanks for that.
Yeah, appreciate it. Yeah, it's definitely a complex. It definitely took me a long time for it to click, to see what the importance of it.
Yeah, but if I what I should have said, if I think her name was Liz, if Liz is still listening, if I tried to explain to you how a bank deposit works, if I said to you that every time a bank issues a loan backed upon a mortgage, it creates a new deposit, and then they simultaneously create an asset and a liability, and they have this accounting practice called triple accounting, triple bookkeeping accounting. And then what happens is you need to take all of those money that is created out of thin air every time you issue a loan, and you split it up into different parts of the ecosystem. You have a network called Swift that then sends it globally through instant messaging that then is connected to the central bank, and the central bank has these digital entries and ledgers. And if the system doesn't create enough debt, then every time you repay your debt or you repay your loan, money disappears from the economy and it creates systemic risk in the system. And so every time you repay it, they have to manage risk where they find enough people that want to take it and pay interest forever, and balance it with those people that are not going to pay off their debt. And then the value of it goes down over time. And so therefore you have to try and diversify it into different things. And then what they do is they package it up into another financial product where they go to the investment bank, and the investment bank creates a mortgage-backed security that they then need insurance on. And what they do is they slice up all these different mortgages that create money every time they issue a loan, and they sell it to your pension through the sell side, through the buy side of the market. And then your pension takes all the money that you're contributing every month, and actually invests it in these products that the investment bank then needs to insure. And so in order to insure it, they create a credit default swap. And a credit default swap is really an insurance mechanism based upon the risk of the bank, so that a credit rating agency can then analyze what the risk of that is for you. And if they downgrade it, it then has an impact on the stock market price. And if you analyze all these things, you might actually start to understand how money is created. And the reality of it is that every time the banks don't create money, you need a central bank that then finds another mechanism to get individuals into debt, and then get businesses into debt, and then get corporations into debt. And then every time the system fails because they don't create enough money backed upon debt in a system, which is a Ponzi scheme because there's more debt than money, you always have to roll it over. So you put it on the central bank, and then the central bank, rather than creating money, it actually just manipulates interest rates to control the amount of money that banks create. And then it has effects on the interest rates that you charge on those mortgages. Through this whole system, sometimes it fails, and so they then need to engage in open market operations where they create securities in order to change the supply of money, because they can't control the supply of money. And so often they have to choose between having a recession and inflation, which then devalues the value of your savings based upon the decisions of humans. And that all allows, then you have to try and get it into another banking system in another country. And so you have this FX speculative market that, rather than having efficient pricing, based upon the value that was originally backed by gold, because gold used to be in a coffer backing all of this stuff, which has its own fixed emission supply of 2%. Sorry. The explanation of fiat currency is a lot harder than the explanation of Bitcoin in the end, but people don't care because they've
Yeah.
just accepted it.
Yeah, that's probably why a lot of the early adopters are like finance professionals, because you kind of understand the guts of the system, and yeah. But to get to my question, I don't want to hold you up too long, but what are your thoughts in regards to, for example, Coinbase? So it's a publicly traded company. It's kind of like the main on ramp for a lot of U.S. investors in crypto. So with the CBDC and kind of the direction the government seems to be going, do you think there's any risk there for U.S. investors in regards to maybe potentially in the future being able to get into Bitcoin or even Coinbase specifically?
Yeah, I mean, my belief is that the CBDCs will want to be an on-ramp and off-ramp into Bitcoin because it would like to, have the data at the on-ramp and off-ramp. If you give that to another country, then you create a risk for your country. So I believe that there will be a global competition in order to try and have the data on the on-ramp and off-ramp with CBDCs. So to me, the whole thing of every country in the world simultaneously switching off Bitcoin from every CBDC would create an opportunity for another country to default in a world of competition and geopolitical currency warfare. So I just don't see the global bans simultaneously. So the choke point will resolve itself at some point because you still have, euro dollars and petrodollars and shadow banking dollars that exist outside the US. So the reason you can get into these exchanges still is because there are banks outside of the US that operate within the confines of US dollars. So it's something that will fix itself. I don't know the exact movement. There was probably a bunch of surprises along the way. But it is a very bad move to not embrace this industry, and even for self-centered reasons, try and control the on-ramps and off-ramps. Because if you don't, another country will. And that's not a good idea. But then
Makes
in
sense.
Coinbase, so you saw, for example, Binance started integrating with DCEP. It's not ready yet for that, but they already made some announcements that they would integrate with WeChat Pay and DCEP. Then China obviously went through its shift. So, yeah, I think, full disclosure, I was an investor in Coinbase private equity before it went public, and still am. And Coinbase announced today, I think, that they're looking at setting up an international exchange outside US. So these forces already come. Interestingly, I tried to get the whole industry in Isle of Man in 2014 because Isle of Man actually stood up to the FBI when they tried to shut down the online gaming industry. In 2014, I was in the UK and I went and pitched Boris Johnson on the Bitcoin strategy. They ended up supporting different fintech industries without Bitcoin. But I tried to do, in 2014, the Isle of Man government said that they would put together custom regulations for Bitcoin, and the whole industry was ready to come over. You would have got Coinbase over, you would have got everyone over at that time because they just couldn't secure banking. But the Bank of England actually contacted, because Isle of Man has their own kind of digital currency, GBP, that relies upon the Bank of England and the Manx pound. It's kind of like a stable coin, but they can also create paper money at the banking level through Isle of Man Bank. But I gave them the concept of trying to create their own digital pound and also making Bitcoin legal tender, and they did it. They implemented the law. They created some security law reform as well. And then the Bank of England said, we'll remove clearing to your island if you support this Bitcoin initiative. And it was only many years later that President Begeli decided to ignore the Bank of England and ignore the IMF and ignore the forces. But Isle of Man, back in the day, it supported the online gaming industry, which is the reason why it exists today. And they put together a really great regulatory structure. and they were willing to do the same thing. And the feds tried to shut it down, and the Isle of Man actually fought against it. So, a little side point.
Interesting. Cool. Well, yeah, I appreciate insight.
Thank you.
Okay, I think that's a wrap. I know we've got K9 again, but unless it's one final question for Simon.
Yeah, we'll do this as the last one, and then we'll wrap it up.
Yep. Let's just bring up K9. One sec. K9, you there?
Hi, yeah, sorry, very quickly then. I just wondered if you had any thoughts about kind of price direction for this next cycle, and whether it can actually kind of become more like correlating gold rather than risk assets, and what kind of how a recession would, because this is the first time it would be in a recession, how you think that might play out.
Yeah, okay, we'll take that as the final question. Thanks for that. I never do Bitcoin pricing because I'm just a dollar cost average guy. I just believe in the long-term vision that each 4-year cycle has a new challenge, and that new challenge, if it overcomes it, takes it to new all-time highs. And it's done that through every cycle I've been involved with. And I believe that it will probably do that at some point in the fourth cycle as we start to get through to halving. So I never trade. I don't care about short-term price. I used to work as a market maker, and I know that 90% of people lose money trading. It's not really my game. I've just found that I know people that were involved in Bitcoin in 2011, and to this day, they're still not wealthy, even though they were involved in the highest performing asset class in history. And it's because they traded and tried to get the price right and tried to call the tops and bottoms. So I've never done that. I've always made sure I earn enough fiat in order to accumulate into weakness and into strength, and just allocate and manage risks. That's been my game. That's the game I'd like anyone that follows me to try and play. And we're going to create a lot more tools at Bank to the Future to help people that really want to build and protect their wealth in a similar way. And that's what we've always done. So I tend not to forecast price. It's just based upon a thesis. I think we're miles away from Bitcoin ever becoming like a unit of account or a stable store of value. I think we've got so much more adoption to get through, more cycles to get through. I still feel we're at the early adopter phase. And personally, I think it's really, really amazing that this has happened and gave people an opportunity to accumulate below the $20,000 level again. I did release videos when it was at 65,000, telling people to get ready for, really, really big corrections. And the corrections, if I can get people to, the psychological shift for me was when I became what I call a Bitcoin thinker, which is that I stopped valuing my wealth in dollars and I started valuing my wealth in Bitcoin. And every month I said, how much Bitcoin do I have? And what risks do I need to hedge against so that I never go down in Bitcoin wealth? And that's a simple thing, but I made a pledge to myself to own more Bitcoin each month. And I don't care where you are, where you're at. When I was in El Salvador, there were people that were on the absolute poverty line that were essentially threatened by gangsters, where they had to give a percentage of their income to a gangster. And when those reforms happened and they no longer were threatened by gangsters, they decided to just find the money and start spending it. But I said to myself, when you were threatened by a gangster, no matter how bad it get, you took it seriously enough to save and pay off the gangster. What if you just took it that serious to save a percentage and put it into Bitcoin? And that's the psychological shift. If each month you can stop valuing your wealth in dollars and start valuing your wealth in Bitcoin, then eventually you can get to the breaking the cycle point if Bitcoin succeeds, and it either succeeds or it doesn't. And I believe that the statistical likelihood of it succeeding from here is it's proven itself to be such an anti-fragile network, and that's all I believe people need to do. And yet they all try and trade, they all try and figure out the tops and bottoms, they all try and go into all sorts of things. And I've been through a lot of scams, a lot of hardships, a lot of losses, but I've still stuck to that simple rule that no matter what happens, and if I don't stick to it, I look back and learn. And so it's a gift the world has given us. And if people don't take it, then it's a shame, because I can't imagine what going through this world would have been like for the last decade without Bitcoin. And that's how I see it. It's such a gift and an opportunity to be alive. And I think I'm going to round it up there. So always remember, you are alive at one of the most interesting and exciting times in financial history. Sometimes it can be really painful. Sometimes it can be really scary. Sometimes you'll get wrecked. Other times you'll do really well. And I want to try and make sure that you're on the right side of that change. So I'll be back next week with everything that happens over the last week. We'll always be trying to help people with the information that they need so that they can decide how to get on the right side of this change. Thanks, everybody. Peace.